we'll go ahead. Sorry, we're about 5 minutes late. We've got a really exciting presentation for you, and I'm really excited to get us going here. So why don't we go to the first slide here? Not sure who's controlling it on that end. There we go. Okay, we've got a little bit of a delay. Well, welcome everybody to our National Home Buying Seminar today. We have about an hour of content here for you. I'm going to get us kicked off by introducing myself. My name is Andrea Murphy. I am the National Senior Director of Sales Implementation, which is a mouthful here for Taylor Morrison. Really what I do for the company is partner with Taylor Morrison Home Funding, our design studios, our field operations, as well as our in-house support team to ensure that we have all of the resources for our team members at their fingertips, ready to help you and assist you in your home buying journey. Myself, I have been in the industry for just over 20 years now, and I've been with Taylor Morrison for a little over 5 years, always with a national public home builder. And that's truly my passion, where I get the most joy. So I have a couple other folks on the call with me today. Christy, why don't you go ahead and get our next introduction kicked off?
Thank you. Good afternoon. Good morning to some of you all on the West Coast. I'm Christy Farrow, Senior Vice President with Financial Services. I've been with Taylor Morrison almost 22 years and in the industry for nearly 25. So I have called Taylor Morrison home for the majority of my career. Honestly, like Andrea, this is a passion of mine. It is mortgage financing, but the reality is working hand in hand with a home builder and being able to help families with their largest purchase of their lives is truly a passion. At Taylor Morrison Home Funding, we focus solely on Taylor Morrison customers. We are a independent mortgage banker, and we truly believe that finding the right financing option is just as important as choosing your home, the quality of your construction, your design studio, floor plan. All of those things go hand in hand on your home buying journey. So we're happy to be here and be a part of this presentation today. As most of you all know, financing is key right now to being able to purchase. So hopefully myself, Brendan, and Andrea can give you a little bit of education on what we've been seeing this last year and a half. But with that, Brendan.
Thanks, Christy. Hi, everybody. My name is Brendan O'Neill, and I'm the Vice President of National Production for Taylor Morrison Home Funding. I've been in the mortgage industry for a little over 30 years now, and like Christy, I have a huge passion, and Andrea, a huge passion about being on the home building side of things. In fact, I built my first home in 1997, and then that led me into realizing that I was on the wrong side of the industry for my particular reasons, and I got onto the home builder side, and I've never looked back since. And I really am just like you, the consumer out there. And a little fun fact is that I've actually built 4 homes in my life in different areas of the U.S. that I've lived in. 2 have been to be built, meaning that they are from a dirt lot all the way to completion, and then 2 were what we call quick move-ins, and those were contract to close dates that were about 45 days. And so I share with you understanding the nervousness and worrisome about building a home, but not only that, and much more so the excitement and the joy of actually walking into your home that you built for yourself and your family. One of those was a first-time homeowner, and then as my wife and I started having kids, the next 3 homes were much more family-focused on that level as well. So I really do have a passion here, and I like to think that I have a great appreciation for what you're going through. So looking forward to seeing how everything comes together today. So thank you very much. Andrea?
Thanks, Brendan.
Yep.
Thank you. Why don't we get us kicked off here on the next slide? Thank you very much. Well, you just heard myself, Christy, Brendan. We are taking you through this journey today. As you saw from all the years of experience, I think you have about 70 years between the 3 of us. We've been through the ups and downs of the market, and who knows if it's up or down right now. It's been kind of tumultuous for the past few years here. But our agenda today is we're going to talk to you a little bit about Taylor Morrison as a company, also give you some market insights on what we look at from a home builder's perspective on a national level. Brendan will cover from a financing side and the insights there, talk about some promotional savings, the cost of waiting, and just kind of what the next steps are for you and how we can help you in your home buying journey. At the end, we do hopefully have some time. I know we got started a little late for some Q&A. We have folks on the call that will be monitoring the chat, and hopefully we'll be able to answer some questions there. Promise you we will answer all questions by the end, and it may be in the form of the meeting chat, or there will be an email sent to you post webinar. So I'm going to go ahead. Thank you for clicking the slide over. Talk to you a little bit about Taylor Morrison as a company. So we hold the very proud recognition of 8 consecutive years as America's most trusted home builder. And we do not take that lightly at all. This is my second or third webinar, I believe, that I have done with the organization. I know Christy has done quite a few, as well as Brandon. But when I think about what America's most trusted home builder really means to us within the organization, it is providing knowledge and experience along your journey. Somebody that you can come to that you know you're going to get an honest answer from, and that we can really provide you the tools to help with the needs and wants of your next buying decision. So we really pride ourselves on helping people move into their new home. This is the largest purchase you're ever going to make, and we really don't take it lightly. We have very intense training that we give to all of our team members to make sure that they're ready to go and hit the ground running as soon as they join the organization. Multiple different levels of experience within the organization. And truly, at the end of the day, we want a seamless experience for you. From the moment you go to the website, start to engage with some of our team members there, which I'll talk about in a minute, to after you close on your home. We're there for you the entire step of the way. So we are one of the largest home builders in the nation. We build in about 20 markets across the United States, and that ranges on, you heard Brandon mention his first home, then you move into your home that's associated with whatever your family dynamic is, and then we hope that your last purchase is going to be with us and potentially one of our amenitized communities that we offer. In some markets, we have attached product that is either, in city dwelling, potentially, more of the cityscape, or just from an affordability standpoint. And then we also offer single family detached with the home on its own lot across all of our different markets, and really serving you at every, different point or place that you are in your life. We are recognized as the world's most admired companies by Fortune, and we have just a lot of accolades that we're very proud of. We've all been with the organization for a different number of years, and we have a lot of different experience, and we hope to bring that to you here today to really help you answer questions and, to be quite honest, just provide some comfort with everything that's going on. The media can get rather scary, pose a lot of risks that are out there that, some are true, some are not. But really our job here is to provide you the knowledge so that you can make the best decision for you and your family. Go ahead to the next slide, please. Okay, thank you. All right, so let me start by introducing my team, right? So we start with our online sales managers. Those are the folks that are going to meet you right when you get onto our website and start engaging with us. If you fill out and say, hey, I'd like to request some information, maybe you're working through our chats, pick up the phone and give us a call. Each market has a team of online sales managers that's ready to meet you however you would like to be met. We have a host of online tools that we have deployed over the past, honestly, 5 years, that we have heard from our home buyers have just made the journey a little easier on you. You sit on the couch and shop online, engage with our team members, as well as reserve your home online and ask to be contacted on specific homes that we have available. Your online sales managers, they're really your personal concierge team. When you engage with them, they are trained to ask you the series of questions that help to place you in the correct area or community or floor plan, maybe that you're interested in, and then ultimately set you up with a private one-on-one appointment with our community sales managers that are on site, and those are your local experts, right? Those are designated to each community that we operate in. Whether you're wanting information on the schools in the area, maybe where the closest Starbucks is at, they're there to educate you on every step of the way and really get you into the home that meets all of your needs. All of the information that they have on the process, they take you through from beginning to end. So they're there for the introduction of all of the next set of team members that you're going to meet in the journey. After you decide to purchase your brand new Taylor Morrison home, we get you set up with one of our professional designers or potentially a canvas package that I'll talk to you about in the next few slides. As you begin to build your new home, you're introduced to our construction superintendents. They are experienced in not only home construction, but really the building codes, most up-to-date and energy codes, as well as all of our engineering requirements that we're held to as an organization, and potentially some others that we hold ourselves to that are just internal for us to make sure that you're getting the most quality home that we can deliver to you. Your loan consultants are also a part of our team. This falls under Christy and Brendan's team. One thing that I always point out that is unique to Taylor Morrison is that they are all licensed local to each market that we operate in. A lot of national home builders have a department that they can help you with your financing journey. But I think that one thing that stands out for Taylor Morrison is that our reps are all local and there to meet with you in person, virtually, on a phone call. They're there to hold your hand through the entire way, start to finish. They can get engaged with you at any point, which we'll talk to you about later on in the presentation. If you'd like to begin your journey with one of our loan consultants, we have that option, especially with today's environment. We find that most of our customers really feel comfortable getting engaged with them in the very beginning. We also have a group, we call them our Arrow consultants, that are really there to help you through your loan qualification improvement, whether we want to improve our credit score to get into a certain program. They're there to really hold your hand through every step of the way, and they're introduced to you on your financing journey. Go ahead to the next slide, please. Okay, so I'm going to jump in on some of the market insights. As I mentioned, this is all national information that we're giving to you, nothing local to any specific market. I've traveled back and forth across multiple markets in my career, but most recently came out of the Phoenix market, and everyone is kind of in a little bit of a different place. But what we're here to show you is kind of where we're at, holistically, and what we really look at from a home building standpoint and kind of where this whole experience is going. So I'm going to start just by showing you, this slide, which is one of the ones that you hear about a lot, whether you watch CNBC, you hear different investors talking about, different CEOs for different companies. This really plays into just the economics of, across the US, and that's really job growth. So you kind of can take a look at this, and really the one thing that I would point out that's talked about at the top of the slide is that all jobs that were lost due to COVID in 2020, we have seen a full recovery from that standpoint. So that is something that we definitely look at as we look at the sustainability of home building and kind of what we're deploying as an organization. You can go ahead to the next slide, please. Okay, here we go. So employment growth. This is also something that you hear talked about a lot. This definitely plays into, where we can see ourselves going from an affordability standpoint. But, just from this past September, the U.S. economy, we're continuing to gain traction on our employment growth. 336,000 jobs that were gained just in September. And you can kind of see the past couple of years and the peaks and valleys there. But if you were to kind of draw a line through, this is showing you that it's very healthy. We're in a really good spot from, just our job growth, our employment growth over the past couple of years. And historically, we're in a really good place, which shows a lot of sustainability for housing and home building, the home building sector in general. Go ahead to the next slide. Okay, this is a fun one. Look at this graph. This is pretty interesting, and I think that we've all felt the pains outside of the home building industry as it relates to inflation. One of the only good thing really to look at this is you see that starting to come down, from a supply chain standpoint, going from where we were at in COVID, 2021, 2022, and starting to see the recovery. We're still not normalized yet, but really starting to see the recovery in 2023. Obviously, where we deal with parts and pieces that are put together in, our widget is the home. This is something that we really watch very closely to ensure that we're understanding what's happening as we look to, lumber prices and all of the parts and pieces that go into your new home. You've probably started to see hopefully some relief as you've gone into Home Depot stores and you're looking at different things that you're purchasing. And this is just for us what we take a look at and make sure that we're starting to get into a good place to deliver you a quality built home at the most affordable price that we can give you. Go ahead to the next slide. Okay, the affordability index. This is definitely no surprise to us, and I'll just kind of focus on the top bar there where it's highlighted in yellow. You look at the median price of single family homes in 2020, right around that 300,000 mark. We saw a pretty large jump going into 2021, another large jump going into 2022. And if you just take a look at where we're at in 2023, as of this past September, at just under $400,000, but really kind of hovering there through most of 2023, that's a $100,000 increase from where we were at in 2020. Brendan and Christy will kind of talk through how this relates to financing and really where we've seen the rates go. Again, no surprise as we've seen this kind of splashed all over the media. And if you're in a home, you've seen quite a bit of appreciation. But if you're searching for a new home and coming out of renting, this is definitely something that you've seen and probably, been the most kind of taken back and should I buy now is where you need to, where your mind goes with this one. So go ahead on this next one, please. Okay, so with the last slide talking about kind of where we're at from a price appreciation, the home month supply, and this kind of plays into the housing shortage that I'll go through with you on the next the next slide. This is just kind of, again, showing where you're at from a national perspective. It's really low. We have, depending on the market, and most markets are in this situation to where going down to between 3 and 4 months supply, that's extremely low. If you look at where we're at during the Great Recession on 11, 12 months supply, where we hit one of our lowest through COVID, and we're kind of inching a little bit back up in there, but definitely not to I'll say a healthy month supply, which is contributing to our national housing shortage. You can go ahead to the next slide for me. Thank you. Okay, so this is just kind of a heat map showing where we're at depending on the market that you're in. We do have little dots representing where our Taylor Morrison markets, where we're in those markets. And you see a lot, right? You see up in the Pac Northwest, down the West Coast, up in the Northeast, splattered throughout the central region, some pockets of Florida, and then our Texas markets. There is a lot of areas that we really need more permit supply there, and where we're really seeing a massive housing shortage. We can't get the permits out fast enough. A lot of our municipalities are strapped from just having folks that are able to process all of the permits. But we had a very large backup through the peaks and valleys as we went through the past few years of just a surge of permits, and we're still continuing to work through those, but both on the single family and the multifamily side, combined with the commercial and apartments, single family for rent, that really kind of created a bottleneck for us to get our permits out, which is where you find this heat map of really, adding to the housing shortage that we've seen across the country. Go ahead to the next slide, please. Okay, so I'm going to transition on some of our market insights into, what we like to talk about and truly where, our passion lies on just why buy new, right? Why buy new versus a used home? And, it's as sometimes as short and easy as just saying, it is brand new. Everyone likes the new car smell. You've got your new home smell. And the little bullet points here on the top of, fewer repairs, better energy efficiency. You don't have to walk in and spend $50,000 replacing windows just to make sure that your heat and electricity bill isn't through the roof. You have the most up-to-date, modern, open concept floor plans, up and coming locations. We really try and focus on our healthy home products at Taylor Morrison and give you that ability to personalize from the beginning. If you have built a new home before, which many of us on the call have, or let's just compare it to when you've, personalized your brand new car that you've purchased. It brings you such a pride of ownership versus having to come in and replace everything or say, oh my goodness, our budget doesn't afford it this year. Maybe in the next 5 years, I'll actually be able to get this home to where I want it to be. You walk across that threshold as whatever your family unit is, and you are so proud. You have everybody come on over. We've got the new home. We're testing out the new barbecue. We're cooking in our new kitchen. It's fun, right? And the great thing about what we're here to talk to you about today is we have so many tools at your fingertips to provide you the knowledge, answer your questions, and really get you into that new home however you need to get into it. And that's what I'll turn over to Christy and Brendan here in a minute to talk about. The other thing that I would say is, we don't have it bullet pointed out here, but just the investment that you have in a new home. We've all probably started somewhere in our life, whether it was coming out of high school, being in college, coming out of college, we're renting, we're throwing our money away. We all know that. This is a true investment that you can have, unlike when you drive your car off the lot, whether you're the first home in the community or the last. We're there as Taylor Morrison to help you with the investment along the way. We're there to help you pick smart choices and options to go into your homes. There's a lot of thought that goes behind what options we offer you to give you the best investment and really understand what are our customers spending their money on so that you don't overspend or potentially underspend in your new home. So it's exciting. You could tell that we all get passionate about it because it's just what we do and what we've done for a long time. But like I said, it's that new car smell. It doesn't wear off for a long time, and you can sit there at whatever holiday you celebrate and say, "Wow, we're in our new home. Come on over, come take a look," and it's a fun process. So why don't you go ahead to the next slide for me? Okay, so this is one that we like talking about because it's still fairly new for us here at Taylor Morrison, and this is our Canvas platform. What this means is it is a series of curated packages that we have assembled all of the touch points that you can really see inside the home. So cabinets, countertops, flooring, some accessories, and the color palettes that you can put together. We have deployed this in pretty much every community or every market, I should say, in some fashion. But we have a whole team that is behind this on a national level that works with all of the top suppliers, such as Sherwin-Williams, our appliance companies, our cabinet manufacturers within each market, our flooring suppliers, to say what is going to be in stock, ready to go for our customers so that we don't see a delay, but also what is on trend, right? So we're able to pull data on what we see our customers picking, but from just a large global perspective, what are customers looking for? So at your fingertips, you're able to kind of either pull these palettes and make it really easy for you and say, you know what? I love the Harmony package. I'm going to pick that. That's my vibe. That's what speaks to me. Or you can kind of customize depending on the community and the market that you're in. The best thing about this and why this plays into talking to you today is that choosing one of these packages, or at least getting started by browsing one of these packages, you walk away from sitting down with our community sales managers or our design consultants, really understanding what that home will cost you at the end of the day. And then when you get paired up with our partners at TMHF, we're able to say, okay, here's where we're at from a total purchase price, and how does that actually, translate over and work into our monthly payment. So if you've been into one of our Taylor Morrison communities, or you're looking to go into one of our Taylor Morrison communities, you can go online and see a slew of information and pictures on the schemes just to kind of start getting excited and shopping online. Or our community sales managers can walk you through this process and how to make your selections easier for you. Go ahead to the next slide. Okay, I'm going to go ahead and turn it over to Brendan and take a breath here on talking for a moment. So Brendan, I'll turn it over to you.
Thanks, Andrea. I love that Canvas slide, and I'm an ARIA guy, so that was great. Thanks for sharing that. So over the next few slides, I'm going to talk a bit about mortgage interest rate history and what's normal. I'm going to talk a little bit more about what are the main factors that are driving affordability these days, and that's going to zero in at looking at the next 10 to 12 years or so. And then we're going to get into some areas of showing you how Taylor Morrison is helping you today. But first, next slide, please, is what's in the media. So we all know that rates have been on the rise, and there's plenty of news articles out there. If you want to click one more time, Kat, I think there's some little things coming in here. Perfect. Thank you. So we have seen constantly over the last year and a half about how rates have been, on the rise. We've got main media publications here like CNBC, USA Today, Wall Street Journal, to name a few, all having articles that, are talking about potentially 8%. And I think we did see it hit 8%. In the upper left corner, we have the Mortgage News Daily rate as of Monday. It was 7.62. And in the upper right corner, we see everything's relative. And last week, rates had a relatively good week. They've started to come down. In fact, as of this morning, I think they're reporting at 7.45. So what's the new norm? So let's go ahead and click the next slide, please, and kind of talk about interest rate history here. The charts I'm going to show you, I'm going to step back for just a second. Over the next couple slides, the charts I'm showing you and so forth, they're really coming from two main sources. And one is the Mortgage News Daily website, and the other one is the St. Louis Federal Reserve Bank website. So those are both have a lot of interesting information. If you feel like you like to research things on your own, that's where I got a lot of this information. But what we're looking at here is essentially a 52-year run of the conventional 30-year interest rate from Freddie Mac. So it goes all the way back to 1971, and then we see a peak in 1981 where interest rates were 18.29%. I'm an 80s kid and love 80s music. And now I sit here and think about, oh my Lord, the homes my parents were buying in the 80s were at 10, 15% interest rate. It's mind boggling to think that that was their normal. And then, of course, over time, we see where rates have kind of come down in March of 2002, 7%. And then we have a long 10 to 12 year run where they're below 5. Bottoming out in December of 2020 at around 2.7%. And then again, like I said, on Monday, they were reporting at 7.62%. So what is normal? Is it what was going on in the 80s? Was it what was going on 10 years ago? Or is it what was going on today? So if you look at Freddie Mac over the course of their 50 years of data, the actual average 30-year fixed interest rate, I believe, is 7.74. So it's interesting. We're just about there right now today. Next slide, please. We're going to talk, though, a lot about what's been going on in the last 10 to 12 years here to talk about these factors that are impacting affordability. As you can see, we had that 10 to 12 year run where interest rates were below 5%. In that same timeline, the median sales price, your green line, has been trending up, and it's grown almost 93% over that 12-year span. However, the blue line is the US median income has only grown at about 52%. So while sales prices are rising at one rate, income's rising at another rate. Now, as you start to get towards 2022, anybody who purchased a home before 2022 is likely, well below 5%. If they purchased at 5, they've probably refinanced down below 3, 4, maybe in the 2s. And what that has is a dramatic impact after 2022 when we see rates start to rise dramatically. We did say they rise like a rocket, and you can see that right there. It looks, like going from 2.77 to over 7% very, very quickly. So when Andrea is talking about the home shortage across America, not only is that in just the permits, but it's also low resale volume. There's a lot of folks out there that maybe don't want to sell their home. Maybe they want to buy a new home, but they don't want to sell their home because they have a 3% interest rate on it, and they're looking at something that's like 7.5 or 8% today. So there's a lot of combination of factors here that are impacting affordability. So the next slide is going to show you precisely how these factors are impacting affordability. So what we're looking at here are examples of a conventional loan, an FHA loan, based on the median sales prices and median income that we saw in the previous slides for 2010, 2020, and then today. So as you look at the 2010 column, the first box there really is conventional loan. And back in 2010, we were around 5%. And the median income of $49,000. So your principal and interest payment was about 23% of your income. And on a FHA loan, it was about 28%. As rates went down and bottomed out in 2020, median price is still going up, median income still going up, but interest rates came down. So we saw that turn into 20% and 24% of your median income would be your mortgage payment. In a short 2.5 years later, we see that what has happened with these dramatically increasing interest rates, well, now we're looking at a 39% and a 47% of your income. So there is definitely an impact on affordability. I don't want this to sound like doom and gloom. And actually, the reason why I wanted to talk about this is so that we can really get into the next slide and show you what Taylor Morrison is doing for you. And this is a really nice slide for me to present because Christy's going to get into the real meat and potatoes on this in just a minute. But what you're looking at here are two charts, one 30-year fix and one FHA, where Taylor Morrison customers who were able to purchase homes throughout this year on our promotional interest rates are averaging an interest rate 1 to 2% lower than the national average. And so you can see the difference there where the national average is between 6 and 8% on the conventional. We've been between 5 and 6% for our national promotion rates, as well then on the FHA side, 6 and 7%, and then we're hovering right around and sometimes below 5% on FHA. So these are some really great things that Taylor Morrison is doing for you. And like I said, Christy's going to get into this with very specific details here in just a minute. Next slide, please. Oh, I thought I had one more. Oh, it's coming up in a minute. So there you go, Christy. Sorry. I'm going to let you take it from here. The baton is passed.
We'll let you take a breather. You can breathe for a minute. Thank you so much. We can click over the next slide, Kat. Thanks so much. Brendan's showing on a chart kind of, what Taylor Morrison is able to do, but how are we doing it? And I just think it's insightful to understand what Taylor Morrison's able to do and how are they able to roll back those interest rates and still make homes affordable and then still be able to help you with the expenses that come with financing a home. So it's important to just notate that Taylor Morrison is actually reducing the interest rate before anyone even walks into one of our communities, gets on our website, and they're doing it in two different ways. We are purchasing with discount points a specific interest rate for homes closing the next 60 days. And that is going to be our completed or nearly completed inventory homes. And what they do is they purchase a pool of loan funds at a discounted interest rate and pay for that in advance. Right now, we're offering that on conventional FHA and VA loans, and it is for owner-occupied only. If you're going into a community that doesn't have any nearly completed or completed inventory homes, we are able to utilize a very unique program to us called Buy, Build, Secure. And that is allowing us to somewhat do the same thing where we are purchasing a pool of loan funds, but it's on a future interest rate of your choice. And that's able to work for those longer build inventory homes. Maybe they're not closing for 4 or 5 months. They're partially through construction, but they just don't fit into that quick move in. And you might not be ready to move right now. Or maybe you want to do exactly what Andrea described, and that is build from the ground up. And with Buy, Build, Secure, we're able to fill those gaps and also able to help customers that are looking to purchase a second or vacation home, or maybe even looking at an investment property. And the unique kind of cherry on the top, in my opinion, is that every loan product has a maximum contribution that a seller, a real estate agent, or a lender can provide to you in helping with those finance costs. The monies that Taylor Morrison is investing in these interest rates is totally separate from that maximum seller contribution guideline that is required by all lending guidelines, and it varies by down payment or loan product. So it still allows Taylor Morrison to provide very rich incentives that will not only help with your monthly payment, but also potentially help with your cash to close. Next slide, Kat. So when we talk about the meat and potatoes, as Brendan stated, let's just kind of compare the payment and the buying power when you have either the conventional or the FHA options that we offer. But I did mention earlier the VA, our FHA rates are available for our veterans as well. So I want to make sure that I mention that. But for the topic of today's conversation, just want to kind of stick to that side by side compare on the conventional and the FHA. So when you look at Taylor Morrison currently offering 5.99%, and that is for a home that's closing by the end of this year, maybe the early part of January. When you look at that current interest rate of 7.5% as of Monday, and compare that to 5.99, that is providing a monthly payment savings of over $400 a month and giving buying power to a consumer of $57,000. And when we talk about buying power, because I will talk about it a couple times today, you're really saying that to buy this $500,000 home, if you want that payment of $2,400 at that 599 rate, you'd have to buy the home for $443,000. So you really are able to afford that higher priced home by receiving that lower interest rate. And then Kat, if you'll click for me, just to kind of compare the FHA. I do want to mention our promotional rate offers, it varies by market and community, but these are the three main rates throughout the nation that we are offering. So in some of our markets, we have rates as low as 4.875 for FHA and VA buyers, and 5.75 in other markets. But I'm going to take it real deep at the 4.875 and compare that to a 6.875 rate. You guys, that's 200 basis points lower in interest rate. That's providing a savings of $500 a month. And that's looking at a $400,000 sales price. So whether you're lower or higher, it's all relative, but it's an incredible amount of buying power of $76,000. And I will just note at the 5.75, I don't have it up here for the compare, but that would bring you a savings of nearly $300 a month with $44,000 in buying power. Next slide, Kat. So buy, build, secure, and this formatting got a little messed up. I apologize for that. Buy, build, secure is that second option we talked about, where Taylor Morrison's offering that reduced interest rate. And there's a couple things you can do with buy, build, secure. And this is probably my favorite program we have because it gives a little something for everyone. Whether you are going to be closing on your home in 4 months or up to a year, or maybe even 18 months from now. Maybe it is a longer build time and it's truly from the ground up and it's just a longer build time depending on that market. You have the option for a shorter term rate lock or a longer term rate lock, and you get to choose the rate, whether you want to buy it down further or you may want to take it up a little higher and get a better rebate back towards your closing cost. But it's truly giving you that opportunity. And if you'll click one more time, Kat, I'll just kind of compare the short term to the long term. And if you look at our little friend in the middle, that's showing the cost being 1% of your loan amount. I apologize because I think like what happened to Andrea, I'm about to lose my battery. Sorry about that, guys. The 1% of your loan amount cost is going to be
Oh, Christy, you just got muted. Go ahead and unmute.
Okay, can you hear me now?
You're back on.
Okay, sorry about that, guys. The 1% of your loan amount interest rate lock fee that is going to be collected is for that security of a 12-month rate lock. So if you're doing a shorter term rate lock, that fee is not there, but either way, you're still getting a reduced interest rate when you do decide to lock in. And I kind of think of that 1% fee as an insurance policy. So we all have to get homeowners insurance on our homes in case of fire or hurricanes if you live in Florida like I do. And, you know, it's just to protect you in case the worst happens. So when you take advantage of a 12-month interest rate lock, you're paying that insurance policy to really get a ceiling on your rate, provide you security of affordability while your home's being constructed, and have the peace of mind knowing that 30 days before closing, you have the option to float down should the market improve. And then if you're looking at a shorter build time inventory home, or you just feel very comfortable with the payment and you just kind of want to see what the market does, then you can certainly float the rate as long as you would like. What we do here at Taylor Morrison Home Funding is communicate on a weekly basis, if not more often, with your construction team and pay attention to when your home's going to be ready. So we can all have that hand-in-hand communication, so we can make sure that when we do lock your rate, your home is going to be ready when your financing is. And this comparison, again, we're just sticking with our basic $500,000 sale price, $400,000 loan amount, but looking at conventional rates, a current 30-day interest rate lock at 7.5 compared to our buy build secure on a 90-day rate lock is a $300 a month savings with $43,000 in buying power. And if you wanted to take advantage of that 1-year rate lock, the rate is a little higher. We are hedging that loan for 1 year, but you're still saving $170 a month and gaining that buying power of $24,000. And what is nice, and we'll talk about this in a minute, is you do have contributions from Taylor Morrison at closing. And so when you are paying that commitment fee to lock that interest rate, you are getting a credit towards at closing towards your closing cost, which essentially is reimbursing you for that expense. Next slide, Kat.
Christy, can I just add one comment? And if you go back to that, or you could stay on this slide, but Christy just mentioned something I think that's worth noting. And she talked about the partnership between Taylor Morrison Home Funding and our field team. And I really do think at the beginning, when I mentioned what's unique to us is having that local partnership with our financing team to ensure that we're not waiting for you to provide updates on what's happening with your home journey. We're there communicating back and forth with each other. So, unlike purchasing a used home or potentially, with a different organization, we're there to make sure that there's decisions, being made at the right times with you and engaging with you when we see what's going on. There is a lot that you're involved with along the way, but there's just things that we have learned, as an organization, as long as we have been together, that helps provide that seamless journey. And that's one piece. So thank you, Christy. I just wanted to mention
No,
that.
thanks. No, I appreciate you bringing that up. It's so true. And that, that really just goes hand in hand of having everything under the same umbrella. So when we look at, kind of moving away for a second to those reduced promotional interest rates that we're offering, really looking at the assistance that Taylor Morrison's providing when you are closing on your home. And again, it also varies by market and community, but I would say anywhere from 1 all the way up to 6% of your total purchase price is being provided in addition to a promotional interest rate offering in many, many of our markets. And I think it was a really great stat that Brendan and I looked at the other day, and seeing that Taylor Morrison has increased their national average finance incentives by 400% in the last year and a half. And that does not include what we're able to provide with promotional rates. So it just shows that impact of what rates have done. And obviously home prices are not coming down. We're able to still give that affordability. And that's where we would rather be spending our money, is to be able to help you get into that home and make it affordable. But when you're looking at your contract incentives, not every single customer needs the same thing. Sometimes it is, we know that the number one reason that a home buyer purchases is going to be payment, typically, if you're financing, unless you're paying cash. And then the other is going to be cash out of pocket. But sometimes we need a combination of those. And that's what's so wonderful working with our loan consultants that are so familiar with what Taylor Morrison is offering, and especially being local in your area, is we can help tailor those finance incentives that suit the needs of your family. Whether you're going to be there 3 years, you think you're going to refinance in 5 years, it's your first home and you'd love to move up, you're getting ready to plan a family, maybe you're going to be an empty nester in the next 5 to 10, but we can really work with you on that and really guide you. I think one of the ones that there's 2 here I really want to point out today, because we've talked about permanent buy downs, paying those discount points to get that lower rate for 30 years, the life of your loan. We talked about the need and reason you would do a long-term rate lock, and then the obvious is just reducing your cash to close. But mortgage insurance has always been known in our industry as kind of the dirty word, and people stand on the sideline and they save 20% down because they don't want to pay a mortgage insurance premium. What's so nice is when you really look at another way to save monthly, having those additional incentives from Taylor Morrison can eliminate mortgage insurance altogether. You actually can pay the portion or all of that premium up front, and then it eliminates the need to put 20% down. We see a lot of times consumers will save that 20% and then leave themselves nothing for a rainy day. If you decided you only want to put 10% or 15% down, or maybe even 5%, those monies from Taylor Morrison can rid you of that mortgage insurance premium that you would pay monthly and keep more money in your pocket and keep that nest egg and those reserves for you, to help maybe with that little bit of a higher payment you'd have borrowing a little bit of a larger loan amount. And then next, the temporary buy downs. Now, we talked about all the years that we've been in the business, and temporary buy downs were something earlier in my career we saw a lot, and it was back when rates were higher. And then they went away. I mean, I guess when rates were 3%, a 3-2-1 buy down would give you what, Brendan, 0% interest rate. But temporary buy downs have made a big comeback, especially in the last year and a half. And it's really helping customers ease into payments. So Kat, if you could go to the next slide for me. So a lot of times it is, we talk about demystifying finance. It's thought that temporary buy downs are adjustable rate mortgages, and they're actually the total opposite. They are a fixed interest rate mortgage, but it's a reduced monthly payment. Your rate is never changing. Your payment changes. What's so nice about a temporary buy down is they're really safe loans. With an adjustable rate mortgage, you might have a fixed rate for 5 to 7 years, but you don't know what's going to happen to that rate after 5 or 7 years. With a temporary buy down mortgage, instead of buying the rate down for 30 years, we're going to subsidize the payment for you for the first 1 to 3 years. So essentially, Taylor Morrison is setting aside funds for you, depending on that buy down period, and then marrying it up with that lower payment you're going to make during that time. And the nice thing is if you sell or refinance during your buy down period, those monies are not lost. Those remaining funds are actually going to reduce from your loan balance when you pay off your loan. And it really helps customers. You think, well, who needs this? A lot of people. The nice thing is it's safe, so you're qualifying at the actual fixed rate. So for example, 5.99, and we'll show you kind of a visual of what that looks like, but you're easing into home ownership, whether you're going from renting to buying. Maybe you just started a career, you know that you're going to be getting income increases or that bonus is coming that will give you that nest egg to help you with that payment along the way. You have a car loan that's going to be paid off in the next 12 to 24 months, and then you're not going to have that $500 or $600 or $300 payment. Or student loan debt, that's another thing too, as student loans are having to be paid off now. I know this because I'm paying one for my child, and it just helps when you know that you're getting to the end of that student loan debt and you're going to have that income back in to help make that payment. So let's go to the next slide and just kind of, well, what does that look like? So you might see a lot of our advertising and marketing out there showing that 5.99 rate and then showing you these different buy down options you could have. So when you see that 2.9, 3.9, 4.9, it really means that your payment is based on what would that payment look like if I had a 2.99% rate. So over on the right side, when you look at the chart, it just kind of breaks down that step into your payment. So in this example, in year one, again, I'm sticking with the same $400,000 loan amount. On year one, your principal and interest payment is less than $1,700 a month. You graduate up to $1,900, then $2,145, and then you would be for the next 4 to 30 years at nearly $2,400 a month. But you can see that monthly payment savings of $700 a month the first year, $488, and then $251. In total, over 3 years, it's over $17,000 in savings. And those costs are part of your finance incentive at the time of contract. So if Taylor Morrison is offering you contract incentives, you can take a portion of that to help get into your home and ease into payment, and any funds left over certainly can be used for standard closing costs. This is owner occupied only, but available on conventional FHA and VA financing. Next slide, please, Kat. So temporary buy downs have many options. We just looked at the what we call a 3-2-1. So, 1%, 3% below the first year and so on. And then there's 3 other options. If you'll click for me. We have what we call a 2-1 temporary buy down, a 1-1 temporary buy down, and one more time, Kat, is a 1-0. And you can see over to the right the total savings, or the total subsidy, I should say, that Taylor Morrison is going to be contributing to help with that payment. So depending on, you may want to use your incentives mainly for closing costs, but man, it sure would help to save $250 a month for a year. And we're able to do that with this bottom right example on the 1-0 temporary buy down. So I just wanted to give that visual. I think it's important to note that we will be sending out this presentation. These are a lot of numbers to take in. It's very overwhelming, but we're just trying to simplify it as much as we can for today. Moving on to the next slide. Getting off of our promotional rates and stepping into your payment and all of the incentives we're giving. I think this is just a really meaningful visual here. When we're looking at prices, we always feel like a lower price must give me a lower payment. And I will tell you, it really doesn't. When you're looking at dollars to dollars, reducing a price, and in this example, $20,000 versus having $20,000 to help you with your financing, whether it's for any of those reasons we talked about. If we just looked in this example of just a straight rate buy down for 30 years, and we're going to use those dollars just to buy down the rate. On that top line is the reduced sales price at $500,000 at today's interest rate of 7.5%, and shows that payment of nearly $2,700 a month. Underneath that, if you were to purchase the home for $520,000, you'd be borrowing $4,000 more in your loan, but you would be able to get your interest rate down to 6.625 and save over $200 a month. And we didn't have to use the full $20,000 in finance incentives. We actually were able to use, another $3,300 to go towards closing costs. So when you really looked at this example and you do all the, math gymnastics behind the scenes on cash out of pocket, it's nearly equal cash out of pocket with a $200 savings. And if you'll click one time for me again, Kat, just appreciating that reducing prices actually depreciates your community value. So we want to make sure that we're always protecting the values in our community, that, we're not slashing prices. We know we've had to do some market corrections over the last couple of years, but we're not expecting home prices to do anything major anytime soon. And I don't have a crystal ball, but I was in the industry back in the housing crisis and in the Great Recession, and it was a very different time when you go back and look at these charts that we presented earlier, to just see that different in the resale supply. And I think that's a really significant difference between today and back in 2007, 2008. Next slide, Kat. So I'm going to close out here and just let everybody know that we really believe that, at Taylor Morrison, we want you to marry your home. We don't want you to feel like you're marrying your loan. So Taylor Morrison Home Funding, at any time after you purchase, whether it's 2 months later or 10 years later, you can always come back to us for a refinance, and we will not charge any lender fees for that refinance. So we really do want to just drive this factor home that, financing gets you into the home, and it doesn't mean that you have to hold or have that financing forever. So with that, I'm going to turn it over to Brendan. He'll just tell you a little bit about how you can get started with Taylor Morrison Home Funding.
Yeah, thanks, Christy. We're winding down, folks. Just a couple more things. Thanks for everybody's patience with us today, and it's been wonderful. I love seeing all that, Christy. Thank you. Kat, you can go to the next slide. I'm going to talk about that Arrow program that Andrea briefly mentioned earlier. This is our qualification and improvement and loan enhancement program. You can see it's set up for a complimentary service. It's available to prospects and purchasers. Our team of professionals is going to guide you through and consult with you and help educate you on credit history and on what you can do to help create a personalized path that'll help with your improvement. And obviously some of the benefits there: credit score improvement, including improving your debt to income ratio. We may be building some trade lines. All of this could get interest rate pricing improvement, as well as mortgage insurance improvement. Our Arrow program has been around for 12 years. It started in 2011. And just since January 1st of 2021, so not quite 3 years ago, we've helped over 1,200 customers graduate from our Arrow program. It's really an amazing program. On average, customers are seeing a 40-point increase in their credit scores, with the all-time high increase being 195 points. And ironically, as we were just putting this together, we had one from Monday, 2 days ago, that went up 115 points. So you can see the incredible benefits of what our Arrow program has to offer. Go ahead and go to the next slide, and I'll kind of circle back to Arrow 2 in just a second. So how do you get started? TaylorMorrison.com/home-financing gets you to our Dorothy portal. And Dorothy is where you're going to begin your journey for pre-qualifying, and then you'll ultimately stay with us and interact with us very closely through your portal and Dorothy throughout the entire journey. By starting your journey, you would then pick your area, as well as the community that you're looking at, and you would begin your pre-qualification process that way. However, go ahead and click the next slide, please. If you felt like that you wanted to talk to a local loan consultant before really doing anything, on the same homepage there up at the top right, you can pick Talk to Us, and then you would go into picking the market that you're at and send an email to the local loan consultant there. We have loan consultants on call every single day monitoring this to be available to you, to call you back and dive into whatever questions it is that you have to offer. And that goes right back to, almost the beginning when Andrea was saying one of the big strengths that Taylor Morrison has with Taylor Morrison Home Funding is that local availability for you to meet with a loan consultant as needed. So very good things here. Now, I wanted to circle back to Arrow 2 because in most cases, you're going to start your journey this way and do a pre-qualification before you get into the Arrow program. But again, any questions you have, feel free to reach right out to your local loan consultant, and we will really help you get you pointed in the right direction. This is how you get started. Christy, did you want to add anything to that before I kick it over to Andrea for the final?
No, I think you covered it, honestly. Thank you so much.
Yep, sure, you betcha. Andrea, the next slide is getting you to take us home.
All right, perfect. Okay, so why don't we go ahead? I believe I got one slide after this. Thank you. Okay, so on TaylorMorrison.com, if you've been able to take a look at our website, you're going to find and learn about all of the special promotional incentives that Christy mentioned and kind of talked through with you on a local level. There, we have, as I mentioned, different ways that you can begin to engage with us. Whether you find that home online and you're sitting at the couch tonight, you're like, okay, why wait? Let's do it. Go ahead and reserve your home. Someone will reach out to you very quickly. Or maybe you're just beginning to engage and set up an appointment. But all of our promotions are listed on there by market that you can take a look at our Make Moves campaign. You go ahead to the next slide, Kat. Thank you. And coming up this weekend, we had, I'll say this is a coming back this weekend, coming up on Saturday and Sunday, we are hosting a national open house. So this is where, when you go to the TaylorMorrison.com website, you can take a look at these banner ads and just click on National Open House. It'll take you to each one of our markets, depending on where you're searching or looking, click on that piece and it'll show you some of our promotional incentives as well as what homes qualify for our national open house, where you can meet all of our local team members, talk to them about what options that are available or potentially any quick move-in homes that may qualify for the special rates that Christy mentioned. Go ahead on to the next slide. Okay, so this is a little bit of a newer platform as we are doing some of these webinars. We had thought that there were some of the questions that you could post in the chat, and it turns out that that function wasn't turned on for us today, but don't fret. If you have something that maybe we haven't covered, you'd like some further information on, you need someone to contact you, that email right there at communications@taylormorrison.com. Feel free to send any of your questions or comments or any area that you'd like to see more on, or maybe any suggestions for our next webinar. We're always happy to receive that. Go ahead and reach out to us through that platform, and we'll be sure to get back with you. I know we're about 10 minutes over. We slated for about an hour for this webinar. Hopefully you found the information valuable. Appreciate your patience at the beginning. I'll just close us out by, really just making a last comment here on behalf of myself, Brendan, and Christy. First of all, thank you for taking just over an hour with us. We'd love to, get you all the information that you need in your home buying journey, wherever it's at. So even if one of these little nuggets takes you into a different direction, we're happy to help and provide you that knowledge. But truly, when you do visit us online, on our website, start to engage with one of our team members, we're there just really to help you, right? On whatever it may be. And we have a lot of customers that visit us on a daily basis, whether it's through our website platform or just coming into one of our local communities. And we have the conversation with every single person. You're not alone on, should I buy now? Should I wait? Are things going to change? And, at the end of the day, that's a decision that you have to make for you and your family. But I got to tell you, for all the customers every single day that say, yes, and I want to move forward with this next step in my life journey, we can get you there. We just need to get in front of you and show you how to get there. And I know that it's easy to say, sometimes it's easier than it seems, but it truly is. I mean, we've shown you just a little sampling of what we can offer you to get you into a new home. So I'll just end it by saying, why wait? Reach out to us on any way that you can, and we'd love to help you with your journey. And we really appreciate you taking the time with us. So thank you very much. And we'll go ahead and close it out, and we'll be sure to get back with you as soon as we can on any question or comments that you send in through that email address. Really appreciate it, everyone. Thank you.
Thank you.
Thanks, everyone. Bye-bye.